This month, Russia suffered one of its most devastating blows since the war in Ukraine began, but it wasn't delivered by tanks, missiles, or artillery, but by a force that's just as coordinated and just as destructive – bureaucrats. Armed with spreadsheets and maritime lawyers with sanctioning orders, the UK and EU launched another in a string of coordinated, comprehensive economic attacks on Russia's so-called shadow fleet, the ghost armada of aging oil tankers that has become Russia and President Vladimir Putin's financial lifeline. This is modern warfare at its finest, crippling one of the largest militaries in the world without firing a shot, using dedicated economic warfare that promises both short-term and long-term damage to Russia's ability to wage the war in Ukraine. So stay tuned to learn the extent of the damage done to Russia's wartime shadow fleet by this bureaucratic brigade, and why stopping it is Europe's goal if it wants to end the war. The so-called offensive began on July 18th, when the European Union dropped what can only be described as a sanctions bombshell. The EU's 18th sanctions package didn't just add more ships to its list of Russian shadow oil tankers, it fundamentally rewrote the rules of the game. For the first time, Europe established a dynamic oil price cap. This means the oil price throughout Europe would adjust to market conditions. Based on preliminary reports, the price would drop from the static $60 per barrel to $47.60 per barrel starting on September 3rd, one of the largest price drops we've seen in recent history and which bears further discussion a bit later. Notably, the price decrease only applies to oil coming from Russia and third parties that acquire their oil from Russia. Large exporters like Norway, Canada, or the US are specifically excluded from these measures, so it's clear they are targeting Russia's economy. But the real shock came 3 days later. On July 21st, UK Foreign Secretary David Lammy announced Britain's largest ever maritime sanctions package, targeting 2 companies and 135 oil tankers that had collectively transported several millions worth of Russian oil since early 2024. This wasn't random selection. British intelligence had identified these specific vessels through advanced tracking systems that can detect sanctions evasion despite Russian attempts to go dark. But it's the targeted entities that are the real indicators of how the UK is trying to curb Russia's economy from the outside in. Intershipping Services LLC, a company responsible for registering shadow fleet vessels under Gabonese flags, found itself cut off from the Western financial system. Intershipping Services alone had facilitated up to $10 billion annually in Russian goods transport. Similarly, Litasco Middle East DMCC, a Dubai-based subsidiary of Lukoil, lost access to the maritime services that made its massive oil-moving operations possible. Lukoil is Russia's third largest company. The 2 larger ones are also energy companies, and operated in over 30 countries before the war in Ukraine started. Currently, this number is down to an estimated 14 countries as sanctions have made it impossible for Russia to maintain its energy subsidiaries abroad and inject them with crude or refined domestic product. What makes this particularly devastating is the timing. These sanctions are hitting just as Russia enters its peak shipping season for winter fuel deliveries to Asia. According to some estimates, 444 ships are affected by the sanctions, including 135 total ships owned by the 2 companies. The sanctions will force them to take much longer routes or even become unable to conduct regular operations. To further understand why the July 2025 sanctions were so devastating, you need to understand exactly how Russia built and operates its shadow fleet. This fleet has quickly grown into one of the most sophisticated sanctions evasion systems, exploiting every loophole in international maritime law. Russia's shadow fleet was established pretty much at the same time when Russia launched its full-scale invasion of Ukraine in 2022, as Western sanctions started hitting its oil exports nearly immediately. Faced with the prospect of economic collapse, Moscow needed a way to keep its oil flowing to markets willing to pay. The solution was to hide in plain sight, using the inherent complexity of international shipping. Russia started with its existing merchant navy, one of the world's largest, with over 976 general cargo ships and 387 dedicated oil tankers. But not all of those vessels were suitable for shadow operations. The ideal shadow fleet tanker needed to be old enough to blend in with the global fleet of aging vessels, but young enough to actually complete long voyages from Russia's various ports, or of those of its subsidiaries and partners, to Asia. This leaves most ships to be 15 to 25 years old, enough to have changed hands multiple times, but not so much that they break down mid-journey. Next came the subterfuge part. Using flags of convenience, Russia registers these ships under the flags of countries with minimal oversight and weak regulatory frameworks. Gabon quickly became a favorite because it offers ship registration with virtually no questions asked, hence why the sanctions hit a Gabonese company in particular. A Russian-owned tanker will be reflagged as Gabonese, usually even renamed as something that sounds appropriately African, and given misleading paperwork that makes its true ownership nearly impossible to trace. Then comes the active hiding. Shadow Fleet vessels regularly disable their Automatic Identification System, or AIS, which is basically the maritime equivalent of turning off your GPS. They go dark for days or weeks at a time, making it nearly impossible for authorities to track their movements via satellite scanning. When they do surface, as they usually need to display the AIS for docking and maneuvering, it's often in international waters where they conduct ship-to-ship transfers. In these exchanges, oil is pumped from one vessel to another in the middle of the ocean, often to another shadow ship under a different flag, further hiding the cargo's origin. So basically, a Russian tanker meets another vessel in waters with minimal international oversight, transfers its cargo to a shadow tanker, and suddenly, Russian oil becomes Gabonese or Maltese oil with a completely different paper trail. The insurance angle is equally sophisticated. Since legitimate Western insurers won't cover sanctions-busting activities, Shadow Fleet operators rely on Russian insurance companies or providers from countries like Kazakhstan or Kyrgyzstan, two landlocked nations that somehow become major maritime insurers overnight. The coverage is minimal and often worthless, but it provides just enough paperwork to satisfy port authorities. As of mid-2025, maritime intelligence firms Vortexa and Windward estimate that Russia has around 1,100 shadow vessels total, those definitely engaged in sanctions evasion, and another 900 grey fleet vessels, those suspected of occasional sanctions violations. This represents approximately 17% of global oil shipments. If you need to conduct 17% of global trade illegally, it goes to show how much you depend on it. So let's dive into how that trade translates into revenue for Russia. Oil and gas revenues historically made up between 30 and 50% of Russia's federal income, generating over $100 billion annually in good years. When Western sanctions first hit in 2023, these revenues collapsed by over 40%. The Shadow Fleet was Putin's solution, and it worked spectacularly well, perhaps too well. In 2024, the Shadow Fleet generated an estimated $9.4 billion in additional revenue, above what Russia would have earned under full sanctions compliance. This figure is assumed to be around 15% of Russia's military budget pre-war, likely enough to fund several months of the war in Ukraine. More importantly, it provided the cash flow that allowed Russia to avoid immediate economic collapse and continue financing its military operations. But the Shadow Fleet comes with hidden costs that are now becoming apparent. Shipping Russian oil to Asia instead of Europe adds $10 to $15 per barrel in additional transportation costs. Asian buyers, meanwhile, demand to receive an appropriate discount for purchasing Russian Urals crude, reflecting both transportation costs and sanctions risk. Also, shipping from Russian ports to India takes approximately 1 month, compared to only a few to several days for European destinations, tying up capital and reducing efficiency. These inefficiencies compound rapidly. Russia exports approximately 5 million barrels per day, meaning each dollar of additional cost per barrel translates to $5 million daily in reduced revenue. The Shadow Fleet's operational costs, insurance, longer routes, more expensive maintenance, and the need to operate older, less efficient vessels can also add up quickly to consume a part of the money throughout. Russia's 2025 federal budget reveals the economic pressure building on Putin's regime. Military spending consumes about a third of the federal budget, at approximately $142 billion. Combined with national security and law enforcement, defense spending accounts for over 40% of total federal expenditures, with a third of that being accounted for as top secret and removed from public records. This is an unprecedented level of spending on the military, something that large countries haven't done since World War II. This military and energy focus is starving other critical sectors. Infrastructure investment has collapsed outside the defense sector. The education and healthcare systems face severe budget cuts, and the reliance on these sectors is pulling jobs away from all others. Russia's unemployment rate has slipped to only 2.3%, a record low since 1991, when the country first came into existence. This might sound good on paper, but in reality, it means companies are having extreme difficulties hiring and retaining personnel, as they're competing for an increasingly smaller pool of candidates, especially as Russia continues recruiting for the military and middle-class families immigrate. These circumstances will only be compounded by the lower crude oil price that the EU mandates as part of the July 2025 sanctions. When oil prices in Europe drop by around 20% in September, Russia won't have many options left. It can either reduce short-haul Shadow Fleet operations in Europe and its surroundings because of the less lucrative price it receives. It can also increase its trade with countries like India or China, but these routes come with the aforementioned added costs. Additionally, if Russia does end up funneling even more of its energy resources to China and India, those two countries can demand even more favorable pricing, simply because they have the upper hand in negotiations. After all, with the EU increasingly looking to cut itself off from Russian oil and gas, which would finally remove shadow fleets from operating within its own countries, Russia won't really have many good export targets left. The few countries it can reach without significant maritime trade, such as those in Eastern Europe, have an alternative through the Baku-Tbilisi-Ceyhan pipeline, which starts in Baku, Azerbaijan, crosses Georgia, and terminates at the port of Ceyhan in Turkey. Additionally, the Ukrainian military has been directly targeting Russian refineries and pipelines near its borders and extending to the Caucasus, further degrading its capability to transport oil and gas over land rather than via water. And if the sanctions actually manage to prevent 444 vessels from trading altogether, Russia faces a logistics crisis just as demand for energy exports peak. The remaining shadow fleet must handle increased volumes with older, less reliable vessels that are now under even more scrutiny from Western enforcement agencies. The dynamic price cap mechanism can also be devastating because it would respond to Russian evasion attempts. When Russia tries to charge above-market prices through complex trading arrangements, the cap automatically adjusts down, maintaining the pressure on other markets to follow. This creates a pricing death spiral where Russian crude becomes progressively less competitive, forcing Moscow to accept deeper discounts that erode its extreme revenue potential even further. China is also going to play a big part in Russia's increasing costs beyond simply being able to demand discount. While Beijing hasn't joined Western sanctions, Chinese banks are increasingly reluctant to handle Russian transactions due to fears of additional secondary sanctions. Even back in late 2024, an estimated 98% of Chinese banks rejected direct yuan payments from Russia, forcing Russian traders into expensive alternative payment methods that add costs to each transaction. And remember, this is the 18th sanctions package imposed on Russia by the EU. Each additional restriction forces shadow fleet operations into more complex, expensive alternatives that compound the costs and risks. If the war and sanctions keep going, shadow fleet operations might become economically unviable for all but the most critical Russian oil exports. The long-term implications of the shadow fleet sanctions extend far beyond maritime trade, with potential systemic changes that could fundamentally alter Russia's strategic position in the latter half of the decade. The most significant long-term impact may be Russia's increasing isolation from global maritime systems. The shadow fleet's reliance on aging vessels, questionable insurance, and subterfuge creates growing incompatibility with legitimate international shipping. As enforcement mechanisms become more sophisticated and widespread, Russia may find itself increasingly locked out of global maritime networks entirely. Furthermore, this reliance on old ships means that Russia doesn't have much of a need for new ones. In 2023, the state bank took over United Shipbuilding Corporation (USC), which operated 40 shipyards and employed 95,000 people at the time. The USC reported it failed to meet its projects due to sanctions blocking imports of vital parts. The Russian government is simply putting significant monetary pressure on projects, both military and otherwise, forcing many suppliers to swallow the losses or lose one of their biggest clients. And if Russia loses the ability to trade overseas legitimately, then the manufacturing of new tankers might slow down significantly due to a lack of demand, putting even more pressure on shipyards to rely on underpaid military contracts. Even if the current round of sanctions only adds slight pressure, the compounding effect of years of sanctions coupled with multi-year economic stagnation or discrepancies can lead to the collapse of Russia's ability to conduct trade at all. The shadow fleet's vulnerabilities are also becoming more apparent over time, not less. As vessels age, insurance becomes more difficult to acquire, and detection and enforcement methods improve. The Russian system becomes progressively more expensive and unreliable. Then there's AI. Advanced AI-powered detection systems now monitor global shipping patterns in real time, using machine learning algorithms to identify anomalous behavior that suggests sanctions evasion. The UK's Nordic Warden operation is perhaps the hallmark of the operation that led to this wave of sanctions in the first place. The operation uses AI to monitor 22 areas of interest across the English Channel, North Sea, Kattegat and Baltic Sea using satellite imagery, AIS data, thermal signatures, and predictive analytics. Additionally, Windward Maritime AI, one of the leading detection platforms, can track over 1,100 dark fleet vessels by combing through satellite imagery, port records, and insurance databases to reveal patterns unique to shadow fleet operations. The system identifies vessels even when they disable AIS transponders by using thermal signatures and wake patterns, then comparing them against known vessel databases. These detection technologies are winning the technological arms race for several reasons. First, satellite coverage has become practically commonplace, with multiple commercial and government satellite systems providing overlapping coverage of global shipping lanes. Second, data processing capabilities have advanced to the point where AI systems can analyze vast amounts of data in close to real time, allowing human analysts to more accurately detect and confirm shadow vessel activities. Third, financial surveillance adds another layer of verification points. When a vessel claims to be carrying Malaysian oil, but financial records show payments from Russian entities, AI systems can flag the discrepancy automatically. This cross-referencing makes complex routes and patterns meant to fool humans increasingly less likely to work against AI. Russian countermeasures are becoming increasingly desperate. Some vessels now carry multiple transponders that they activate and deactivate to create false electronic signatures. Others use GPS spoofing technology to broadcast false location data. The most sophisticated operations involve coordination between multiple vessels that can electronically swap identities while at sea. But these countermeasures often create new detection opportunities. GPS spoofing, for instance, can be detected by comparing different satellite systems and looking for inconsistencies. Multiple transponder use creates electronic fingerprints that might actually be easier to track than legitimate single transponder operations. As such, the technological trend strongly favors detection over deception, something that we've also seen in the battlefield in Ukraine. This suggests that shadow fleet operations will become progressively more difficult and expensive to maintain as enforcement technology continues to advance and Europe decides to pump the pressure on Russia to its limits. Of course, a single wave of sanctions won't do much unless it's backed by the international community. Luckily for the EU, it's already a multinational community with extensive resources, goodwill, and options for cross-country coordination. For example, the REPO task force coordinates between the US, UK, EU, Canada, Japan, and Australia, with financial intelligence units sharing sanctions evasion detection capabilities across borders. The countries also announced a separate Shadow Fleet task force in March, aiming to extend these capabilities to detecting ships. When British intelligence identifies a new shadow fleet operator in Dubai, that information is immediately shared with EU enforcement agencies, the US Treasury, and other G7 partners. Within weeks, coordinated sanctions can target the entire network rather than individual companies. The cooperation of financial monitoring gives Europe unprecedented access to Russia's covert actions for its shadow fleet operations. Similarly, the Nordic Baltic 8++ initiative works on a regional basis to provide regional cooperation. Today, 8 countries make sure sabotage is deterred to critical undersea infrastructure such as pipelines and data cables. As this coordination deepens, it becomes progressively more difficult for Russia to find gaps in the enforcement network. This will only become natural as Russia becomes more isolated geopolitically. Smaller countries, which make up a single-digit percentage of Russian exports, are more likely to follow Europe's lead in implementing sanctions or finding alternate suppliers for energy products. And as these measures take their full effect in autumn of 2025 and are likely going to get expanded as we approach 2026, they could meaningfully degrade the economic foundation behind Russia being able to maintain its current war effort, which is more similar to attrition warfare than an invasion at this point. The question is no longer whether these sanctions will work, but whether they will work quickly enough to end the war before Russia's economic collapse triggers even more desperate and dangerous responses from Putin's regime. Thank you for watching, and if you'd like to find out more about Russia's economy during the war, check out this video. And to stay informed on the war in Ukraine and global geopolitics, subscribe to The Military Show for daily videos.